So in this video, I want to show you a very simple and easy to follow trading strategy that I used as a beginner back then, and this strategy helped me to maximize my profits while also being able to learn the market at the same time. This is the exact strategy that has helped me grow, so hopefully guys, you will get some free and educational value out of this video so you can become a great and profitable trader too. So this trading strategy is actually built on support and resistance levels that, as you probably know, are the two most common concepts in technical analysis used in trading. So as I promised at the start of the video, this strategy is all about, earning while learning. So I will break down what support and resistance levels are. I will show you how to identify them accurately, give you some examples of course, and what's most important, that I will guide you step by step how to effectively trade using these levels. Okay, so let's break down what is support, and I want to do it in such a simple and really easy to grasp way, because if you have no clue what it is, then how you can use this strategy effectively. So imagine support as a kind of safety net or floor underneath the price, and it's like when the price is falling, it hits this floor and can't really break through. So what happens next? The price bounces right back up, and it would basically just look like this. So this is a decad chart, and if I would draw a rectangle zone just over here, this would be our support zone. So we can actually see how the price drops, touches the support level and bounces back up again. It happens the same all over, so we see a price dropping, reacting to this level, and now it seems like we are going back up again. So this basically happens because there's a lot of traders who believe it's a great price value and starts buying or taking their profits. Okay, so let's talk about the resistance. So I always like to think of it as the opposite. So support is the floor and resistance is the ceiling. So when the price is going up, it hits a point where it kind of runs out of the steam and can't go up anymore. So it's basically, if you will try to jump to the ceiling and you're gonna hit your head and you're gonna just come down, right? So this is what basically happens to the price. It tries to break through, can't manage it, and down it goes again. So this is simply because there's a lot of selling pressure at this level, which basically results in the buyers being overpowered, causing the price to fall. So again, if we can take a look at this decad chart, we can see that we have got two resistance zones to look at. Okay, so to begin with, we have this first resistance at the top, and we can clearly see that this would be the main resistance, and usually traders would mark just one on the same time frame, which has the most significance to it. So we can clearly see that the price pulls back down every single time it reaches this resistance level. So moving on, we have this secondary resistance that was basically formed more recently in between the main resistance and main support. So once again, we can really tell that the buyers really tried to break through, but once again, it was rejected multiple times. And when I talk about these rejections of the support and resistance levels multiple times, it means that the market is creating us trading opportunities. So now that you understand what support and resistance levels are, there is something crucial that I want you to remember. So these levels are not set in stone, so never assume that these levels will hold on for ages, but you rather think of them like an areas of interest that you want to keep a close eye on. So with that being said, 9 out of 10 times support at some point will be broken and become resistance, and vice versa when the resistance will be broken and become a support. So once again, this will be a great example on the decad 1 hour chart. We have a nice resistance zone just over here. We can see how the price rejected multiple times. The same goes for the support. Every time it bounced, we have a nice upside move. But once again, if we zoom in over here, we can now see that the actual support was broken and now it stands for a resistance, because as you can see, the candlesticks never really closed above it. It was rejected by these wicks just over here, but now it stands as a resistance. So that's what I meant, that 9 out of 10 times at some point it will be broken and it will be a new trend, a new resistance to look at. So the first step in this trading strategy is to, of course, draw support and resistance zones on your chart, because this allows us to spot where the price could possibly reverse. Now, when you draw these zones on your chart, I do highly recommend to draw them on a higher time frame, so you can examine the main reversal levels and basically more critical points on your chart. So for example, I will use AD CAD on the 1 hour chart. So we can clearly see that this is a nice support level, and this would be a great example of a resistance. So let me just quickly move just like that. Yeah, that's perfect. And let's move this one a bit further up. So we can clearly see that the price was rejected, shot towards the upside. We see multiple rejections of the resistance. The same goes over here. And now the price seems to be rejecting off the resistance. So I forgot to mention this in the beginning of the video, but basically when you draw your support and resistance zones, the more times the price touches the zone, the more reliable it is. It just simply shows that the level stood against the price, passing the test many times, and will continue to do so. So the next step in this trading strategy involves watching and waiting for when the price hits this zone once again. So in this example, we can clearly see that the price is moving towards the resistance zone after being rejected off the support. So a reversal candlestick at this point would be ideal because it would align with our expectations, but we're looking for a significant reversal candle to really confirm that the price is turning around and not just like temporarily stalling before continuing its climb. So the third step in this trading strategy involves waiting for those two candlesticks that reaches this resistance zone, in this case, to completely close, because this candlestick closure will be the signal you have been looking for in order to know what is your next move. So following our example, we can clearly see that the next two candlesticks formed a bearish engulfing pattern, and this is a very great example that shows us how a strong candlestick should look like and what you should look for in trading support and resistance. So now that we have a confirmation of a candlestick closure that was rejected of this resistance, once again, we know that the selling pressure is likely to continue. So in the fourth step of this trading strategy, your focus should shift where to enter your trade. So in this case, we would enter on a closure of this bearish engulfing candlestick pattern, and we will go ahead and place our stop loss just above this resistance level. Of course, you can take a look back and see where was the rejections of the wick, so just around here. But of course, if you want to be extra safe, yeah guys, if you want to be extra safe, you can go ahead and place above this highest wick rejection just over here, but I will go ahead and do just as for the first option. And for your profit target, you essentially aim for the support, or you can use fixed risk to reward ratio based on your risk management strategy. So 1:2 or 1:3 is a pretty good choice to start with. So now if we go ahead and play the replay tool on, we can see how nicely the price dropped towards this support level over here, which basically resulted in a nice profit of 41 pip. Okay, so using the same currency pair, let's quickly discuss how you would enter a buy position. So we can clearly see that the price was rejected of the support once again, like it did multiple times before. So we have this candlestick closure with a long lower wick, which basically means that initial push was towards the downside. However, the buyers overpowered, which led to a next candlestick closing higher than the previous one. And this is a very clear sign suggesting that the bulls are taking over, so we can enter on this candlestick closure over here. So now for the stop loss, we will go ahead and place just below the support, and for your profit target, you simply aim for the resistance. So I will go ahead and basically set it just around this level, and this would give a nice 1:2 risk to reward ratio once more. And once again, this would be a very great example how trading off the support level could potentially give you a profit of 41 pip. So just before you go and apply this trading strategy into your trading routine, or at least give it a chance, here is an example of my many trades I took back in 2022. And I can't lie, I cringe a lot by watching my past trades, and I can definitely see where was my mistakes, but at the same time, I definitely see how much I improved during these years. But yeah, the idea behind this trade is the same. The price was rejected off the resistance, but then I believe it consolidated. Yeah, so as you can see, we had some sort of consolidation. This initial support was broken. Now it was standing as a resistance. I can see that I had another support level based on this rejection, so that was broken also. And as you can see, eventually it did reach the take profit target of 160 pips in the total profit. Again, 1 to 2 risk to reward ratio was being used here as well. So if you enjoyed this video, then definitely let me know in the comment section down below. And I also highly recommend checking out my previous video where I made the ultimate technical analysis course that actually works, and you can click on here to watch it next.